Gold bulls turned cautious as USD strength caps recent run-up to record high. Hello and welcome to my channel. Thank you so much for being here. I have a really interesting fundamental analysis for you today about gold. The gold bulls, as I said in my previous video, they were getting ready to push the price of gold to a record high above $2,000 an ounce. Well, that didn't happen because the safe haven US dollar rallied, which capped gold's recent run-up. Gold bulls are now said to be cautious, and this is according to the latest weekly gold report by the largest gold dealer in the world, the London-based bullion bank and precious metals dealer, the 400-year-old company. That's right, 400 years in business, Goldman Sachs. In their latest weekly gold report, they say that while gold has been benefiting from broad dollar weakness and the resulting negative real rates environment, there are increasing signs that the market is beginning to price in the eventual tightening of monetary policy. That's exactly what we talked about in this channel. Eventually, the Fed will have to tighten its monetary policy, and when that happens, the party for gold, silver, and other precious metals will be over. They go on to say that the gold bulls have recently turned more cautious, with the price coming under pressure after reaching a one-week high of $1,989 an ounce on Tuesday. The reason for that, of course, is the rebound in the safe haven US dollar. Now the dollar index is back to where it was at the beginning of December. In addition to that, Goldman Sachs says that while gold held up relatively well during the December FOMC meeting, which we covered in a previous video, and while gold held up relatively well during the December FOMC meeting, the market is now beginning to price in the eventual tightening of monetary policy as indicated by the sell-off in nominal and inflation-protected treasuries since the beginning of December. So it's not just the gold market that's starting to price in the tightening monetary policy. Other markets, other asset classes are doing that as well. Here is another very important quote from this report that I would like for you to pay attention to. It says that in our view, the sell-off in gold and other precious metals is an early sign of the market beginning to price in tighter monetary policy. And that is why we have a base case for 2 rate hikes in 2022, with risks of more if inflation does not abate. So they see 2 rate hikes priced in by the market in 2022. I agree with this assessment. And just as a reminder, the first quarter of 2022 starts in less than a month. So we will see how gold reacts to the first rate hike that's priced in by the market, the first of 2 rate hikes that are currently being priced in by the market for 2022. I hope that this was helpful and that you enjoyed this report by Goldman's. Let me know in the comments below what you think about the upcoming rate hikes next year in 2022. And thank you for watching. Have a great rest of your day.